Good afternoon, everyone. BC Richfield here, coming to you live from London. It has just gone 3:30 here, the same match on UTC. Welcome to Congress Day 3. If you're just tuning in, if you've had the pleasure of watching the other sessions from this morning, which have just been absolutely fantastic. So a huge shout out to everyone there. And obviously a really, really special mention to all of you guys who are making it on today. So we thought we'd put on a little session for you. Trader Daink, legend that he is, has agreed to come back on. He's got to run a few errands first, so he's going to go and do that, and then he's going to join us in a little while. So what I'm going to do is we're going to start with the basics. We're going to look at levels, how we plot these levels out, what I'm looking for with my particular trading strategy. And then when D comes along, we're going to get him, we're going to integrate him in. He's going to tell you a whole more in-depth stuff about ranges, how you can use them, trade them. But what I want to do is just, for a lot of our viewers that have messaged in saying that they're either new to this or they're a little bit more new to price action, or it's something they want to understand better, I thought it might give out a little bit of value to you guys for me to just run through the basics of my setup and how I do it. So let me get this screen shared with you, and then we will take a look at some charts. So I'm going to start with my Bitcoin chart, and guys, do let me know if there's any issues with the audio or the video at any point. I'm going to disappear off the screen for a few minutes for you. I'm sure you won't be too disappointed about that. It's just to make the screen nice and big for everyone that's watching this, maybe on a phone. So here we are. Now, what I'm going to do is I am going to clean this chart right up. And then let's get ourselves a nice clean chart. Now, one of the things that I see, I'm going to turn my session breaks off for a moment, and we're going to start on a weekly, guys, all right? And I think the real emphasis on this for me is making sure that we don't lose sight of our higher time frames, all right? Because they can teach us so much. Remember when we had Muro on at the beginning of the week? What an absolute legend he was. Do remember to give that guy a follow. He's very much from the same school of thinking that I am on the higher time frames, right? Very much allowing for your candle patterns, your individual candles. And something that the keen-eyed among you will notice is that when he's talking about these key pivot points or these reversal points in markets, what he's looking for here are the telltale signs from the candles. So I'm just going to take a few seconds to mark these up for you guys, right? Just so that you can see them. Now, if we're talking about the reversal points here, I'm just going to mark up the bearish engulfing candles on here, all right? Perfect. So just to spot out a few of them here, guys, right? What we can see here is we've got our bearish engulfing candles. 2, 3, 4, and then we've got this one here that makes 5. So when we're looking at these, right, a bearish engulfing candle is telling us that the market is getting ready to make a move in the opposite direction, right? Why is that? Because the volume of the candle, which is what I'm interested in, some people will trade them from the wicks, but for me, I'm interested in the bodies. Lord Tang, you legend, everybody else that's live, Queen, Bernd, who's been in here for a little while, everyone, how are we doing, guys? So just marking these. Now I'm going to mark the bullish engulfing candles, yeah, so we can see from the flip side, which makes for some pretty interesting reading, right? Now, obviously, this is on a weekly scale. Now, I'm very much someone that attributes more weight to the higher time frames, right? Especially when we're dealing with situations like this. And we're going to look on the weekly, we're going to decant this down onto the daily, and then we're going to move on to the lower time frames, all right? So when we're looking for this confirmation, and also, let's not forget we've got a bearish engulfing candle here. Just, we're not trying to sell this silver bullet here, guys, right? We're not trying to tell you that all things will work. It doesn't work all times. What we're doing is we're trying to tell a story. So we want to always be aware of the times that these things trigger and they don't work, because we want to look into the reason as to why, okay? So, Crypt Kid 3, YouTube user. How you doing, buddy? Good to see you on here. Got some alpha coming up for you. Crypt Kid 3 was one of the people that suggested to us that it'd be really cool to do kind of like a session like this. So glad you're here, buddy, and hopefully you get some value out of it. So we get this one here, and we're going to come back to this one. But look at this, right? We come up to a key point. We've swept a high. Okay, I'm going to go into this in a bit more detail. Let me make this a bit bigger and brighter for you guys so that we can see it nice and clearly. So we've come up, we've swept a key level. That means we've taken the liquidity out above these highs. Not just this high here, Let me zoom in for you guys as well. Not just this high here, but this high here as well. This move has come up to here. It's tried, think about it like this, it's tried to move forward, right? It's tried to build the momentum to go higher. But these wicks leading to the upside that come down are telling us that there's sellers up there or there's sell pressure. We're going into buy side liquidity, meaning that, there's people up here that are looking to sell, right? So as we go up into this level and we see this rejection, we come back down under here. When we get this bearish engulfing candle, which by the way is when the body of the candle completely consumes the prior candle's body, right? The body of the candle consumes or engulfs the prior candle. The same way that this one, look at the size of the body on this candle, yeah? And we see how much it engulfs this prior candle. And in fact, we should probably mark this one up as well, shouldn't we? So as we come up into here, we've got an early sign that there might be a reversal coming here, but it goes back up. It doesn't really make much progress above these highs. Then we set this high, price stalls. Then as it runs this high, it closes underneath this, right? And not just this candle here. But what's important for me when we're looking at a point of a reversal is looking at this candle here. So let me just delete this for a minute, right? We know that's there from that high. So this is what I'd like to share with you guys. One of the main points that makes up my trading strategy on a higher time frame, right, is I'm looking for these liquidity sweeps. And this goes back to an old weekly method from traditional markets, which is your 3 sweeps, right? So what you see price come up and make this high, right? Price then comes up and makes this high, but see how it closes underneath the high of that previous wick, yeah? That's when we start to get interested. We're then looking for 1 or 2 more consecutive versions of this, which we get here. 1 comes underneath, closes. This one goes up, comes back down, closes within the range of this candle, and we get our bearish engulfing. We start to expect that there's going to be some kind of reversal. Now, if we were looking at this purely on this time frame, what you would want to see is price closing underneath this low, yeah, because we've come up, set the high, higher low, higher high, higher low, higher high. Now, this is the key low. When we break this low, yeah, we have our market structure break. Yeah, some people will say it's a market structure shift, others a change of character. But the idea is that we've gone from a bullish trend, yeah, which is here, higher highs, higher lows, all the way up, into a bearish trend. So we had our early warning signs here. Right, we had our 3 runs on liquidity with the price closing back within the range of the prior candle, yeah? Then we get this bearish engulfing candle that drops down. We come down, take out these lows, set this lower higher, and then we break market structure. So what use is that to us? Well, it's a lot of use, right? Because one of the things that a lot of people do, I don't know, I understand what incorrectly, but as I view it, certainly, is people want to jump into the market too quickly. So people will see these big moves down, right, and they'll FOMO in. And they'll FOMO in around about here. What happens? The market very often gets pushed up higher, takes out the stop loss, only to go in the direction that you first thought it was going to go. So why is this market structure break important? Okay. This market structure break or shift is important because when we have this break, yeah, that's the market telling us that it's willing to search out prices lower. Okay. So now what we need to say to ourselves is, okay, what's drawing price lower? Let me zoom right in here so you guys get a really good view. What's drawing price lower, right? So first thing that's drawing price lower is liquidity, right? That sat below these lows. So what we're saying to ourselves is there's stop losses below these lows, right? That's how we're viewing it. What happened was people that were long here that caught this big move up would typically place their stop loss under the key swing low. So what we're expecting here is liquidity. So what we're going to do is we're going to mark the extreme of this with a line. Now, when we lose this level here, we get this big bearish engulfing candle and it closes down here. What I'm looking for on this candle is for price to open, bearing in mind this is our open line, for it to trade slightly higher and then sell off, right? But what good is that if we haven't got clear targets, right? And what gives us a very, very clear target here is this, right? There's 2 things here. There's this, which is the extreme. This is the low, right? This is where we're saying the liquidity is resting. We want to hunt for that liquidity. So as price breaks down here, it gives us the confirmation, yeah? We could take early entries on lower time frames up here, slightly higher risk, all right? But this breakdown here gives us really, really high time frame confirmation, all right? So as we break this, we're then looking for price to find the sell side liquidity, right? Or the next resting liquidity, which we believe is below these lows. So what we're doing is we're trading from high to low, right? We're looking for that constant hunt of liquidity. And Nblaze, my man, good friend of mine and a brilliant friend of the nest. Thank you for answering that question. Ron did ask a really good question here, C. Ron, which is, does the same strategy work on lower time frames? Absolutely. The key thing that we need is we just need to be using our high time frame for bias, which Nblaze, who's been part of our community for a while now, great lad, jumping in, very accurate information. Well done, mate. Well done indeed. So what do we do with this? Well, we can jump into the charts down here, right? And we can look for opportunities to trade this lower because we've got our higher time frame. And while this doesn't look like a big move, I can assure you it is, yeah? So if we looked at the open of this candle, let's just highlight that area there, right? In fact, just this candle. Now, I'm going on to replay mode. For those of you that might not know what this is, you can activate it up here, and it allows you to choose where you want to cut to on the charts. Just allows us to see price or go back to a certain point in time with a little bit more accuracy and also play it out like we're actually trading, yeah? So, the reason I want to do this is because as we start to drop down the time frames now, we're going to tell the story of price. So, that is on a weekly scale. That was our market structure break on the weekly. If we were looking at this on a daily scale, however, yeah, we see where our bearish engulfing candles are. They're leading us, right, to the lower time frame trade setups. So here we've got our engulfing candle, engulfing candle. What do we have here, right, in this area? What's really key for me is we're talking about these liquidity sweeps that we got here, yeah? The reason we want to see those is because price will often look to search out that liquidity, right? So the reason this is called buy-side liquidity up here, which I appreciate, can be a little bit counterintuitive, right? But buy-side liquidity up there is because we're looking for people to buy from us. Let's say we're long from here. Now let's remember that if we go long here, this is our stop loss, yeah? Under this low. This stop loss is a sell order, right? Now, the very same way that if we're short from up here, and I know the colours are counterintuitive, guys, but bear with me. If we're short from up here, and this is where our stop loss resides, and this is where we believe lots of other stop losses reside, then if we're short here, our stop loss is a buy order, right? We can't forget that that is the way the market works. It's buyers selling to sellers, sellers selling to buyers, right? So if we're buying here, we need to sell to someone up here. That means there needs to be buyers up here, right? Our buy side liquidity. Now, what we can see here is that a price ambles up. We have this impulsive move higher. Price breaks into this area, takes out these highs. It also triggers breakout traders, right, that are looking to go long at this point. That generates lots and lots of buy orders. That means if you're an institution believing you want to go short here, or a large account or a number of large accounts, a hedge fund, smart money, whatever you want to call it, all the people opening those buy orders there can be filled with your sell orders. And if you want to sell aggressively, like this move here will show you, that's how you would come into the market. You'll often see these points of consolidation, yeah, which goes back to a concept that's made famous by a number of traders, including ICT, Larry Williams. But ICT specifically, when you're looking at the power of three, you're talking about consolidation, manipulation, distribution, right? That means price is consolidating here, waiting to make a move. This is a fake out, yeah, or the manipulation to trigger people to go long, to generate the liquidity for people to go short, right? So that's why when we're looking at these naked highs and lows, that's what we're looking for from price. So how does that play into our thinking? Well, all I ever do, is I am applying the same high time frame methodology to low time frame charts as well. Hardeep, you legend. Hardeep is a very good friend of mine and has been a student of the Next and myself for a while. And he's a total legend and just popping out some bits and pieces. Lots of patience. Yeah, you've got to have patience in this game, but also students that are willing to work hard like yourself. So I can see Daink sitting there backstage. He's waiting. He's geared up. He's smoking 4 cigarettes as we speak, right? He's he's waiting. So I'm going to finish this piece really quickly because mine's nice and simple. Then we're bringing this legend in and we're not going to waste any more time. So let me do this for you quickly in a different color, right? Here's our high. This is what I'm looking to sweep, yeah? So I want to see that high swept. Remember, we did exactly the same on the weekly scale. Here's our market structure break on the weekly. This was our sweep on the weekly. Now, what we're looking for, and we'll do this in teal, shall we? We've got the shift there, yeah? So we've got the break. That's the break of structures to the upside, but that's the manipulation we're looking for, right? That's as SZ would favour, or a legend like D. That's your deviation, right? That's your fake out. That's your swing fail. What we're saying is, okay, well, how do we know, or how is there more likelihood that we see price going down here? Well, we want to mark the low that sweeps the high. This is the origin of the move that takes liquidity. When price breaks down from here, what you want to see in an ideal world is you want to see an impulsive move through it. Yeah. So you want to see displacement. You want to see a powerful move through that level, which tells you price is willing to go lower. Then we can look for entries on a retest of this, which I would call, and it's just a term that I made up. Lots of other people call it lots of different things, but I call it a breaker line, right? That's our break of structure. We're looking for a retest. Means that we can sell here on the retest, our stops above the swing higher, or we can look for an inefficiency, like a fair value gap, that we would look to trade this into. All right. So that's the long and short of it. We're looking for sweeps. We're looking for market structure, right? The way that I trade it, I'm always looking for levels, right? Always levels. So for me, it's so important. Price going into a level, how it reacts at this level. Because you know what? If we came into this level here, we didn't break down and close below this low. Instead, if we'd done something like this, yeah, then I'd be looking for the opposite. Right? I don't want to hold a bias. I want the market to show me what it's willing to do. And then that's our entry here, but to go long, right? We've seen the breakout. We've waited for price to tell us it's going up. We want it to come down, retest this level. Then I'm dropping on the lower time frames and getting ready to find some entries. So without further ado, because we've got an absolute legend waiting backstage for you all, right? I can see he's champing at the bit. The cigarettes are out and he's got that look in his eye. Let me welcome to the stream the one and only, the legend himself, Trader Daink.
What's going on, bro? How you doing, man?
I'm good, mate. I'm good. Look, I really appreciate it. A lot of you don't know this, right? This guy's been running around like mad, running his group, bossing out some amazing trades. Smashed out a Bitcoin short this morning for about 5 or 6 hours, was it? If I remember right.
No. 4.2 hours.
Oh, yeah. Sorry, too humble. 5 hours. No, don't be ridiculous. 4.2.
Yeah, it's a bit too much, then.
I don't want to oversell this boy, right? I don't want to. But he's doing that running around and still made time to come on, right? We had a lot of people contact us saying they really enjoyed the session. Mostly Daink. People didn't really enjoy me as much, but I don't blame them, right? But they wanted to get us on and they wanted people to understand how we can look at the market, how we look at structure, and just to look at some setups. So I thought there's no better example than that. I've given you my views. How I look at the high time frame, I'm looking for liquidity sweeps. I'm looking for confirmations on breakdowns. I do a lot of range trading. For me, I'm looking for key levels, how price comes into those levels, how it interacts, and then I'm looking for my triggers on lower time frames. But the man with the real alpha here for you to just blow you away is the main man himself. So, D, I don't know how you want to start, mate, but maybe we can take a look at some charts and let's just take a look at what you've been pumping out this morning, man. It's just been glorious.
I took a scalp. I did a live session in the morning. What's going on, Ben? Good to have you here, bro. Shout out to all you guys, man. Shout out to BC Richfield and Crypto Burb. If it wasn't for Burb, this wouldn't have happened as well in the first place as well. So
another legend on here as well, D. You love seeing this.
And
it's Country Club.
Is it Raz is here as well?
Yeah, man. Fan of Country Club's in here. Yeah, mate. We got a load of crew in here, man. So
big love to you guys, man. Appreciate that. So what happened was in the morning in the session in the morning. Well, not in the morning. It was in the afternoon to New York, right? I was looking at Bitcoin. Obviously, this is what the fuck. Yeah. So really and truly, this was like this week's Monday's range, and the orange line here is last week's low and last week's high, and also at the same time is last week's Monday's low and high. And what happened was quite interestingly is that if I were to remove all this line here and just look at just the range band environment, most of you guys are aware that I love trading range band environment. We have a deviation over here. And once we step back up, clean breakout of the market structure. I mean, ideally, a retest and hold above here would have been great to go for along to the mid range, but it never came back, so it wasn't a big deal. But then now, if I were to draw my fucking lines, where is it? 1 second, there we go. And then, yeah, we came into Monday's high. Just looking for a potential breakdown of Monday's high from there's a range band environment over here itself. Once we lose this low over here, that will give me a complete confirmation to scalp trade it back into the mid range, and then we'll see what happens. But at the same time, guys, FOMC is today, so I'm being very cautious of what's happening as well. But we can see if we can squeeze in the scalp here or two. But the scalp I was playing in the morning was like, before I even jumped on the stream, I was like looking at this. I was like, well, we're in a range, aren't we, in it? And the range band environment is literally this. So if I were to draw Fibonacci, it's this low here and that high over there, right? So let me just run this down. This low here caps the market as support. This high over here caps it as a deviation, resistance, deviation. We run the highs there from the London session in the morning, and we start breaking down. I was teaching the guys how to make a 17-hour trade. I don't know, should I teach it? Should I break that down, that 17-hour trade? How would you do it?
Yeah, definitely. I think there's a few people on here. I think there'll be some pros tuning in, D, to find out how you do it.
Fuck it. You guys smash the likes, right? And then and subscribe to the Burb Nest. And
that's it, man. And follow Trader Dank, man. Follow Trader Dank.
That.
Find out what he's all about, man. Find out what he's all about.
Appreciate that. I really appreciate that. Like, honestly, like, really and truly, like, if you guys not following BC Richfield, then we're not going to do this again. But, like, I'm joking. So, what it was, I was telling the guys, I was teaching the guys how to make a 17-hour trade. Now, unfortunately, I wasn't at home at the time. I had a bit of a situation going on. So, that required my attention. But by the time I came on, the price reaction was around, it was about 12 o'clock, was around here. So, I missed this leg of the trade down over here. So I was like, okay, fuck it. So like in hindsight now, running this through to you guys, right? Like, like when you guys see me get like crazy R's, like 17 R's, 20 R's and 27 R's, you've seen that. It's only because I've narrowed down into like the 1 minute, sometimes the 30 seconds to look for a trade itself, right? To look for an expansive play. Because like I was saying to you guys already, before I even start looking for the trade, you got to establish a range band environment. So you can see that low here is key support right here. I mean, fuck all this shit here. Let's just focus on just level to level. That will support. And then the next high, which will be this high in particular, that is the level. So you got to say to yourself, right? If we've done a deviation here, right? And we do a stop run here because we have a quick on the 5 minutes there. If we get back in, right, to increase our probability, you're looking to get back in under resistance. Let me draw this again. And to get back under resistance, you want to see price do whatever he wants to do, get back below, find resistance, and then break down, showing bearish market structure to send it back to the mid-range back to range low. That's as simple as that. It's nothing else. You can do the same principle on scalping, on a range band play, whether you're on an hourly, the 4 hours, the daily, the yearly, even the 30 seconds, the 15 seconds. Some of you guys may have seen me do that on the stream itself. I haven't done that for a while, but never mind. So what happened was, I was looking at this, right? What I would do is go drop it down to the 1 minute now, because I see we have a stop run. I'll be focusing, right? Forget the stop run there. I'm focused on this high here, this high in particular. It happened early in the morning, and it strangely happened at 7:34. And to me, I like to call that thingy like just the pre-London start, right? Mm-hmm. Between like before 9 o'clock, it's always a pre-London start. Why? Picture this, for example, you're going to work. If you're going to work, what time are you going to start waking up? 6:30, 7 o'clock. So it does make sense. You're going to have a little bit of a pre-London little excitement going on. Mm-hmm. So coming into it, right? So obviously at 9 o'clock, right? Like I'm like a lot of people are at the desk and they're ready to take a trade or whatever. But you've missed out a trade from here to there, filling out all this inefficiency here. So what you do is you wait and be patient, and you say, okay, this is a range band environment. Why? You got this high here and you got this low here. This is a range band environment that you can start narrowing it down to a 1 minute, right? So if I were to do this, it would be something like that. This is how I would start looking at things a little bit, and I'm just using key SR levels, and you can see these SR levels act as support and resistance. We come down here, do a deviation, we hold into it. What would you say? Back to mid-range, from the mid-range, holds above, go back to range high, and it does do that. So now we've done this move here. Now I start narrowing this motherfucker back down. Like, how do I make an explosive move down? And I know I've got a trade going down. So I drop it to the 1 minute, and I start looking at this. Now on the 1 minute, I'm seeing that the last up candle here, right? I'm showing a lot of alphas here. It's a one-time offer. It's not going to happen again. So pay attention, right?
Even
So,
I don't know how he does this, by the way. It's just...
bro, you're gonna love this now. You see this particular area here? Now, there's two things, right? You got two sets of areas you can choose. You can choose this area here, right? So it's from this low here to that high there. And if you're taking a short, your invalidations here. I always talk about invalidation stop losses, and this is how I play more of an aggressive trade. That's the invalidation. That's one area there. Oh, let me highlight that again. And you can see the trade, right, as it comes down, we come back down, step back in, and it's about the mid-range between these two highs over here, the low and the high itself. And then we come back down, make a lower high. You can see this bearish market structure start to form out itself. Once we lose this low, this is your area of confirmation over here. You can put a hard stop there, playing it for the down play itself. So now for me to make it into more of an aggressive trade, this is what I start looking for. You see this particular area here? This is how I would have, me personally, I would have done it, right? So I've got this highlighted here, this candle highlighted there, and I can see price come back down, wicks into it. It doesn't take out these highs there. I haven't entered the trade. It doesn't take out the highs. I know resistance, like if we got an SR, right, we got a resistance. When price come into it, we're going to find resistance a few times before we break down. Just like you got, like, you know, the wedge or whatever, you're going to find that kind of resistance happening. It doesn't happen once. It doesn't do this and then sells off. That's bullshit. Whoever tells you that, it's a bunch of donkeys, in my opinion. But you do have an area of resistance a numerous time before we have the breaking market structure to go back down on the lower time frame. So then, for me personally, I'd be happy to miss this, number one. Now, if we can enter in, I'm happy to re-enter in here with a stop loss here. And this is what I would have done. So price comes in. We can already see it happen there. Let price come in there. I'm happy to step in. You can always be happy to step in whenever you want, as long this high doesn't take out. So if price were to come back up and do something like this, breaks down, you still haven't entered the trade. We found support. Once we get back below it and a retest, you can say, you know what? This high here has held because we got this high over there. It's a lower high. We can send the fucking market back down, back into anticipation of a range bound environment, because what you've got here is a deviation of the range bound of the range environment. That's what you've got here. So you're anticipating a move into the range, find resistance under the range, play back to range low, target done, finish, and it's over. So if we were to enter here, right, and we got some balls to enter in because it's a scalp trade, and when you're scalp trading, you always manage your risk. Let's say you've entered in here at the base of it, my stop loss would have been at the top there. And like I said, remember I said to you, I'm aiming for the base of the range low. But let's just draw this out there. We know the target's hits anyway because I joined in afterwards. So that's the high, right? And this is my low, and I don't care when you one thing that, like, it's always like a very not prime advice. That's really wrong because it's non-financial advice. But one of the alphas I would always say is that when you're playing a range bound environment, you don't really care about the liquidity. I don't care about liquidity over here, right? I just care about level to level. That's what level to level means. It's not about you trying to squeeze a bit more. If you're trying to squeeze a bit more, you're just being a bit more hopeful, unless you got a different type of style you're playing. But if you're looking at range bound environments, you're literally playing it within the level. So if that's the range low, the mid range will be about here, maybe a little bit high actually. Out there, that looks about mid range itself. And what you're doing is you're just playing it with that level. Yes, we've hunted that liquidity over this side, but if you look here, this liquidity here didn't get taken out from these two. It got taken out afterwards. So you're looking for level, because at each level you're gonna find a response. At range high, you're gonna find a response or rejection. At the mid range, you're gonna find a response of support. Until we get back below, then we play back down lower. So I would advise you guys to hold the trade and take profits at each level, 25%, 75% mid range. Always take profit. That's number one. Because if you're not prepared to actually manage the trade, if you starts showing me bullish market structure, you have to be prepared to cut the trade. But if you don't have the experience, and over time you do, by with a lot of experience behind it, then you can start, for me personally, I like to hold the trade a little bit longer. And let's say my target is range low. I'm happy at the mid range. If he comes back into here and cuts at this position, I can cut the rest of the trade because I expect to come back to the range high. So I'm happy to play that. But with you guys, for the early starters, and over time, it takes years to actually get this. But then for me, I'll be targeting the range low itself. And you can see, according to this, is a 6-hour move, but that wasn't the case. When I showed it, it was was it a 30 seconds?
So I told you it was a 6R move, D.
Nah, fam. Nah, fam. I tell you something though. It was a 17-hour move. I showed these guys, man. I fucking can't remember. I didn't even record the fucking stream. That's the thing is. I didn't record it when I did in the group.
We got people in the chat going mad, going like, finally a live trading session with Trader Dank.
Here he is. Here he is. There we go. 15 seconds. There we go. That's it, right? So no, it wasn't that. That's wrong. Guys, I got it wrong. I can't remember where. But I swear to God, it was a 17-hour. Ask the guys that in the country club.
Man, I've seen you pull. I've seen you pull them, mate. I've seen you pull them. I've seen you pull more than that as well. Like, I just think it's it's really, really interesting for the viewers, right? Because I think sometimes one of the issues people have when they're in trading is that they either get too focused on the lower time frames, forget to check the high time frame for confluence and levels, right? And also people tend to kind of set overly ambitious targets, right? Or get nervous when they're in a winning trade, start to take profit too soon before key levels. And then you're just ripping your R to pieces, right? You're ripping your R to pieces. 100%. So I think that one of the key things to take away from this, or one of the key questions I think for you is, you're obviously a master of playing range-bound situations, and you spot them like that, right?
Are
you using like a higher time frame confluence to say to yourself, look, if we're in this compression at the moment, we're in this range-bound environment. Obviously, on a higher time frame, that's very often, or it always is the case, that's price consolidating before it's getting ready to expand. It's getting 100%. Ready to distribute higher or lower. So are you going in with a preconceived notion, like I was covering with everyone just before you came on, looking at the higher time frame, decanting that down onto the lower time frames, right? I mean, are you looking to kind of key confluence on your higher time frame, or because you specialize so much in the lowest of time frames, are you just looking to step in when you see these consolidations, and you're just using your knowledge of market structure to play that out?
Both, really. It depends. Both, really. Like for this one, right? The reason why I targeted like the lows over here, right? I mean, was like, and not this inefficiency on the downside over here that everyone can see, that all this thin move over here. The reason why I targeted that is because I've got insight of the idea that that's the mid range of last week's mid range. So I've got to be cautious here. And as you can see, we're finding support here. And I entered in a little bit after. I entered in somewhere around, what the fuck? I think it was around here. Well, let me just zoom into it. The trade somewhere. Let me get it up on thingy. Give me a second. I'm messing about.
Do it, man. While he's getting that up, let's get Dank's details back up, guys. Do please remember, follow this legend. I mean, the alpha that you guys have seen on the streams, so thankful to have him on, but it really is a fraction of the stuff that I see this guy, and hundreds, thousands of people see this guy put out on a daily basis, right? There it is. I remember seeing this one actually, man, and thinking to myself, did you create this range on the lower time frame?
Yeah,
so you're looking at the leg, right? You're looking at the low to the high before you have that corrective move. And what you're saying to yourself is that high is capping the market to the upside. We've had deviation 1, prices come to mid-range. Now deviation 2 is when you're getting really excited. You see that liquidity sweep of the highs as well. Now you're saying, okay, I'm going to step in here, right? So yeah, take it over, man. Let's tell these people how you look at this.
Yeah, so like step in. So like once we step in on this is on the 5 minutes, obviously, right? It's a screenshot. But on the lower time frame, you can see as we step back in, the invalidation will have to be here, playing where target 1 had to be the mid range. And if we see bullishness on the mid range and you're trying to go down to range low, you'll have to cut the trade. And me personally, I'd probably cut the trade. I'll break up these highs there. So you see this candle here. That would have given me enough reason for me. You know what? Cut the trade. You know, if it's like half an hour or 0.2 of an hour or whatever it is, cut the trade and we'll see what happens at range high. And then as it comes back down, you can see that we start forming like a trending line itself. And then that's when we get that spike up and, you know, run the highs, come back into the range, and we're playing it back down to the mid range. So I came back home at the time around here when price was just wicking into the mid range itself. I'm like, okay, cool. The 5 minutes gave me a close below it. And every time it was 5 minutes, bounce up. And then I was like, you know what? Fuck it. I got to enter in because otherwise I'm going to miss out because I'm watching this. And I'm looking at this particular area of consolidation. And here, as well as, you know, I entered in over here. My stop loss was above that high there. And then I'm just watching this price. I want to see price get back below the mid-range. Get back below the mid-range. Show me that bearish market structure. Let's go to target 1. and let's go to target 2 itself. I'm going for the lows itself. I don't care about this liquidity over here or anything further below. I'm just focusing on level to level. And I was doing this live with the guys, and I was like, okay, price comes into it. I wanted there's 2 things. Number one, you can see that we got again a bit of a trend line going on over here. It was a bit of that wasn't a good one there. Probably around like that, something like this. Got a slightly bullshit deviation over here, but it wicks into it. And my high, I mean, invalidation would be here. That's what I was saying. And I played a bit tighter over here to get a little bit more of a nicer eye, nicer look into the market there. And then what happens is once it comes back up, we get that close below here. And then I was like, all right, then I'm quite comfortable to carry on with the day trade, which is fucking dumb. Don't ever do that, guys. Don't ever take a day trade and then get sidetracked to something else, right? If no. That's literally what happened there. I was like, again, it comes with experience. I was quite happy to know, number one, we've come into this area of consolidation right here. We whipped into it. We get back below it. We're back below the mid range. That's 2 confirmation there for bearishness. Third confirmation is this is just finding as resistance. I'm quite happy to say, you know what, let's carry on and see what happens there. And I literally just carry on with the freaking plans for Bitcoin. I don't know what the fuck I was doing, bro. I tell you something though. I don't know, man. Sometimes I'm a geezer. Imagine, like, I don't take coke in it. Imagine if I did take coke, how fucked up would I be?
Is there an option on YouTube to slow people down when they speak? I know you can speed them up like 1.5, 2x, couldn't you? But if you were on any kind of uppers, mate, you'd need slow down 5x, I think. And
YouTube,
but
YouTube.
What I love about you, mate, is lots of top pros out there. They're very cryptic about what they put across. I love the fact that you give everyone everything, but say it so fast that they really need to listen properly.
Bro,
really makes them focus.
We were talking about this when we was in London together, and I was saying like I give out bare alpha, but no one picks on it.
But they will do. You just get this spike, right? I think it's why I say to a lot of people, right? SZ, who I owe a lot to, right? I learned so much of my craft, especially for crypto trading and FX under him. EXO as well for some macro stuff, but SC really was the really, really big guy for me. I studied ICT a lot, but SC was the one that made everything very real for me. Yeah. And I remember for years and years watching these old school videos before TradingView was even around, right? And he's on this old clunky system that every time you move a line, it goes ka-chonk. And he's sitting there, you hear him chain smoking in the background.
I remember that when he was. Do you remember? Fucking hell. That was a good time they were.
I do, man. They were really, really good times. But you know what? I count myself really, really fortunate that I had that kind of access to him then. Right, when he then had his Twitter presence, his YouTube, it was at a point you'd message the guy, and people were really kind of stepping in, right? I was lucky; I was early in that respect, so I got all that alpha. And then as things get bigger and they move on, obviously it's more difficult time wise, everything like that. But what I would say to people right now is, if you're a fan of this type of trading, right? If you're anyone that follows me, you're anyone that's even whether you've been through the nest, whether you haven't, whatever you do. If you're interested in this type of trading, you've got to broaden your horizons, right? And I tell you this right now, where you won't get that kind of intimate access to someone like SZ anymore, he's one of the biggest names in the industry, right? What you got to watch out for is your real alpha mofos like D, right? If you can get in there with a dank, you give this guy a year or two, you won't be able to get near him. I'll be ringing him, he'll be on a private jet to like Malibu.
Nah, never. Don't ever say that, bro.
He's too humble, man. I know he wouldn't. I'm joking. But I do believe in the private jet part of it, right? I really
no, but listen to this, right? You're one of the few guys, right? Like, if I'm jumping on a private jet, I'm giving you a ring. I'm like, bro, like, is there an airfield near you? In it, I'm going to land down there. Let's pick you up. Let's go. Let's go to Vegas.
I'm on my bike, man. I'm riding down there as fast as you can believe, and I do believe it. He is true to his word as well, this man. But before I digress into my wild fantasies, right?
But Richfield, do you know what it is? Though I'll tell you something though. Like, before we carry on in it, and I think this is like quite important to everyone else itself. Is that like, in your mind, when you first, met SC and then, first met Daink, right? Like the Twitter, not the geezer behind it, but the Twitter as well. You're like, you're quite amazed by this whole thing, this whole new world that's going on. And like, how the hell is he doing this as well? And smoking out for alpha, I appreciate that, man. But the thing is, like, look at the first moment we met, there was nothing but love and respect. And I think that's the problem that's happening on Twitter that's missing out, is the love and respect. And if everyone wants to make it, but if you don't show love and respect to someone else, they're not going to show you the time and day.
Yeah. No, I mean, it's a very true thing to say. It's also something that I live by and something that I think rings true in life, right? There's an old saying, okay, it's a bit cheesy or whatever, but treat people how you expect to be treated yourself, right?
Yeah,
Look,
yeah,
at the end of the day, if people don't want to be around you, they don't like your stuff, they don't get on with you as a person, it's no
they can
problem.
move on.
You're both doing yourself a favor by not wasting your time. People nowadays want everyone to like them, and
Sprafford.
they're not really comfortable
What
with
a
who they
legend.
are, right? So,
Yeah.
Smoking's the killer. Dank says, Spraffers, exactly. I was saying we need a damn logo on here. We should have approached Marlboro or someone, shouldn't we, as a sponsor?
Fucking hell, we do, man. We need
Forget
to
like
get
all the
paid
big
from them.
crypto exchanges and that, man.
Bro,
You should
like the amount of cigarettes we smoked in London and in Paris.
It
Bloody
was
hell, man.
ridiculous. It was
Yeah.
like I said to you. I got on the train. I'm coming home, and then I realised as I'm turfing stuff out of passport control, and I got like 3 half-finished boxes of like 20, all
Yeah.
different types, brands, everything. About 5 different lighters.
Bro,
Jesus.
those are good
But
times. Good
you
times.
know what, man? It was. But you know what opens those doors for stuff like that is opportunities. Is being good to people, being good to yourself, be humble, learn. There's people on there that want to go and do it. And, SZ cracks me up, but EXO as well. They're mad shit posters. They will take people down for fun. But you know what?
Yeah.
They've earned their pips. That's them. They're true to themselves. Let them be that way. They weren't on here slagging people off or picking fights with people when they didn't have the proof of work.
No.
Right?
No.
So let those people do what they do. You, be humble, be kind to people, help people. Like look what Dee's doing. He's coming onto this show. Look what Burb's done. He's put this whole thing on, the entire company, everyone to do all this stuff for people. Legends like Dank coming on it, Muro, like all the people. We had Macro Alpha on this morning, dropping loads of alpha for people. I mean,
all these guys are legends,
man. They are sick. And do you know what? As someone like me that came from absolutely nothing inside this realm and made my way into it, hard work, respect, and network. Right, 3 really, really key takeaway things for you there. So, D, my boy, Burns keeping you updated with the football results. By the way, everyone, if you're hardcore,
Spain's winning 1-0. Did you watch the Germany game?
Yeah, boy, how did it finish in the end? They were
Japan won 2-1.
No, I saw them go 1-0. I saw a little highlight come up to 1-0.
Japanese man. No. I watched the last 15 minutes, man. And the Japanese came
hardcore. Man, I love the underdogs. What can I say?
Yeah.
You know what I mean?
It's like the Argentina game versus Saudi Arabia.
This is brilliant. He's absolutely right. Massive spoiler for anyone that's spent the whole day recording everything to listen to us. I love it.
Yeah, fucked up. Sorry, guys.
No, it's fine, man. Everyone forgives you, apart from maybe Nuno. We're so sorry, Nuno. But look, so one thing that really interests me, right, is when you're talking about ranges. So ranges make up a really big part of how I trade, and especially how I learned to trade. Now, I do really, really study liquidity as well, liquidity theory, stuff like that. But one of the things that really interests me when you're talking about range trading, right? So something that, let me just share this chart with you and get rid of all this stuff. One of the things that I look for, right, on a range is I quite often use like a higher time frame.
Yeah.
Right? Even like a weekly, for example. So I had some levels that people were just going mad about. They're like, "What? That doesn't make any sense. I can't understand where you got that from. That's not a real level." Blah blah blah. But for me, right, and if I put this on a daily edge and we focus on recency, and things like this, right? Now, we've got this inefficiency here, right? And we clearly got this consolidation. If we're looking at support and resistance in this area, a lot of people are kind of saying to themselves, well, how do I know which low to go for? How do I know which high? Now, for me, if I'm looking at my low side here, I'm simply looking for what's capping the market, right? So what I mean by that is if we've come into here, right, and I'm talking about before any of this has come out, right? We've got this deviation. What happens? Price comes within here, trades back up. Now, if we were looking at this in a range perspective, and I'm not saying you take that as your range high, but purely more as the overall move. Again, what we expect when we deviate like that is a move back towards the 50%, right? Now, as you would do if you're doing order block theory, stuff like that, if you're taking an order block, right, you would be looking for less than 50% of that order block, ideally, to get violated before you had a sell-off, right? Which is pretty common order block theory. I attribute that a lot more to kind of range trading because what I'm looking for, and if we look on a lower time frame for something that some of our members will have a few ideas about, like Emblaze, Lord Tang, certainly a few of the other guys that are in the chat, I trade a lot of inside bar patterns, right? So
I've heard you say that a lot, I rate that.
Yeah, man. Do you know what? It's something I learned a long, long time ago, like more traditional finance stuff. And there's a legend that a guy I really, really like, actually. We haven't connected with him, unfortunately, for this, but and I don't know him that well at all, only through Twitter. But Dominic James, Irish guy, man. SE knows him. He's over there. That he's a really, really sick trader. And him and I have had some banter about this because we both use a lot of like a lot of inside bars, right? So just to run it through the viewers really quickly, and then I'll get you back to Dank, because it covers the same principles, right? So your
You're
inside bar
writing
pattern.
your range there. I see what you're doing. Yeah.
Yeah, it's nice, man, isn't it? Do you know what?
Yeah.
The principles are the same, right? So
Mm.
this is your mother bar. You make the inside bar pattern when you get your mother bar, and then this is your inside bar. The rules are this whole candle, including its wicks, have to close within the range, the high and the low of the previous candle. All right. Now, what we're interested in is the inside bar first, and then the mother bar. And the whole idea of this is we're playing this like a range, right? So if we take this as an example, as we come into here, this is why we were taking longs, right? We've come into this area, we've come and closed back above. We're now back in the range. Where are we playing to? We're targeting range mid, right? 50%.
Yeah.
And we can see here, even when we draw this 50% fib on here, right, you can see how well respected this level's getting. These long upside wicks showing you the sell pressure. Price comes down, doesn't quite reach the range lows, retraces, can't get back above 50, flushes out to the lows. So what I'd want to see here is price move up to this 50% line. And then, like you said, I'm looking to cut some of the trade there. And then I'll flip, if we step back in and break down, I'll look on the lower time frames for shorts. If we reclaim it and look to pump higher, I'll look for longs. Ultimately targeting the range high. But again, I would split this into a secondary 50% range, right? Or I would use what I call my dank range.
Oh, the 25, 55. Yeah.
You got your 20, and again, look how clean it sits on this, right?
Very, very respected as well.
It is, because when you think about it and you think about the way institutional money moves, when you think about elements like that, it makes sense that if algorithms, computer trading systems are controlling this more than anything, or certainly they have a hand in it, right? Then, they're going to be using mathematical levels like that. And there's no easier ones than using your fib and your range breakdowns, right? Now, the other thing that you'll notice is with inside these, you get other inside bars, especially as you go on to the higher time frames, right?
Yeah.
So once again, we can see as we came in and found this inside bar, if you're looking for more confluence,
Yeah.
then
So,
this
to me,
3 levels, right? That's crazy.
Yeah. To me, what you're using is last week's Monday's range. And that inside
exactly right, man. Monday's range. Yeah. So I always mark out Monday's range. So again,
and it works out really well. And liquidity is resting on the upside.
Mate, it is exactly
does come
right.
to the mid range that you've of the inside bar you've got.
Mate, 100%, right? So what we're trading at the moment, or certainly what we're looking at the moment, right, is this. Right? Now, the reason that I've been looking at shorts here or considering them is because of this move here into the inside bar, right? So again, we've got our mother bar here, which is also Monday's range, right?
Yeah.
The other thing that interests me here that I'm marking up on here is this, right? Which pretty much matches that inside bar.
It does,
which is our weekly open, yeah?
Mm-hmm.
So as we're looking at that, right, we've got our levels there. All of a sudden, we've got a point of confluence. Now, if we get above and we hold this on the lower time frames, and I normally look for structure on a 15-minute, and then I'm executing kind of maximum of 5-minute, but probably down. Then we're looking for our market structure, right? So what we're saying here is as price comes down, runs these levels, we're looking to step in, right, when we get our structure breaks. Now, for me, as we've had this big impulsive move up here, we've left this inefficiency. As we've kind of dipped back into this here, I'm thinking, are we coming back into this area here to fill this inefficiency? And then we see a move like this. Because the only thing I'm thinking is, as we've come up to here, we haven't quite got up to these highs. But although the highs can be traced back to here, giving us equal highs, I think these two were particularly unique to buy a bit, these big wicks. But people ask this question as well, which is the thing that I'll leave you on and hand you back to D. But that is that it's for me, I'm allowing for the exchange that I'm trading, right? These were very real on Bybit, so I need to make an allowance for them if I'm on here. If I'm trading Binance and those wicks aren't there, obviously I'm not going to make an allowance for them, right? So while they can be scam wicks and stuff like that, I need confluence, but this scam wick here, if you want to call it that, we've got confluence from this high, right? This one here, we've got confluence from this high, yeah? So there's backup. If this thing was just hanging up here in the middle of nowhere, then you really, really need to reassess, right? But as long as you've got confluence from a level, that's where you can step in. So let me pass you back to the main man himself, and let's see.
Which is exactly what you're looking for. So what he's looking for, like he highlighted, was like, to me, was Monday's high, and also the weekly open there. So something like that on a scalp trade, right? I can see that we've got the market structure is still looking bearish, right? Why is that? Well, let me delete this for a second. I've got a high here, lower low, lower high, lower low, lower high, lower low, lower high. You know, like, is this now a breaking market structure to go up on the upside there? It's very possible. We don't know, but we'll find out very soon. As on this high holds, I know there's more downside on I think going back to Monday's low. But why am I confident there's more shorts? Because we found resistance of the last week's Monday's mid range, which comes down to what BC was talking about. The first, no, not the first, the second mother bar, I think like the inside bar itself, which is where it's wicked off. Broken market structure on the downside. Like we lost this low here, so it's still looking for shorts. So if I were to play this as a quick scalp, I mean it's too late now. I can't fucking play this. I can see that there we got an area consolidation where we have this on the 1 minute. I can see you see this particular candle here, the low and the high there. That would give me enough confidence to enter in with a stop loss here. I can put in a thing. I mean, invalidation would have to be here, right? But like if you want to keep it a little bit wider, it's all there perfectly fine. And then look, we come back up. This low here from this very particular candle will lose its, range bound, a bit of a deviation, find resistance off it, gives you more of a, and that's your final confirmation. On the 1 minute, it doesn't look like it, but if you go on the 15 seconds, it looks more like it as well. And then where would you be running? You're running for these lows itself. And then we're looking for potentially coming back into these areas here. This is the next area that I'm going to find. Area could actually find a support, hold into it. If it sets back up, I cut the rest of the trade, and then because we're going to come back up higher, and it's a scalp, you just take your profit wherever you go. But once we lose this area here, then this is my scalp trade to play back to Monday's. Well, let's say Monday's high. So the blue line is Monday's high. You've got this particular area here, the last stand candle over here, which set the market back up higher. I'm expecting some sort of reaction. I can wait all this out. Well, I will have to actually now because I can't really enter the trade. And if it comes back up, no problem. I look for to take the shorts as long the invalidation holds above. Well, not invalidation, but the stop loss holds. Play back down as target 1. And now, if I want to be more play the breakout play, because we're playing ranges. What we've got above here, all this is just a range bound environment. Once we get back below, find resistance here, I'm happy to enter the trade. Stop loss above this high itself. Or you could let it do its deviation, come back down, whatever the deviation, stop loss above there, play it back down to Monday's high, and that's the scalp done off the 1 minute.
Man, I love it. I absolutely love it. Guys, we are running short of time, which absolutely breaks my heart because there's so much alpha
in it. Yeah.
I mean, it just flies, doesn't it, man? It just flies. I hope everyone's got some value out of that. I mean, I certainly have always get some value out of talking to this guy. And we've had some really, really great questions come in. One thing I just wanted to finish people off with, because I know a lot of people probably aren't overly aware of this. So Monday's range, we had a few questions on there about Monday's range, right? So it's the range that Monday sets, the high to the low. And a way that I like to mark it up, if I clear all of this up and I just share my chart with you very quickly, just for those of you that are asking, is I like putting on my session breaks, guys. So if you go down here to your little sun emblem, you can flick your session breaks on and you can see these very pale grey lines in the background.
Dude, I had no idea about this. What the fuck? Do that again.
The amount of people that I turn around and tell this to, right, that are like, what? I thought you used an indicator for that, right? So
I was
down here, right?
5 years later.
Session breaks on.
Way.
You don't need session breaks, man. You're too good for session breaks. Right? But it's really handy, right? Because when I set the highs and lows, I love using this, right? Because you go on here and clean all of this up. And then you can obviously do it on the daily candles, right? So you go onto your daily candles, which is great. But I'm someone that really likes to pay attention to the prior day's high and low as I trade, yeah? Because you can find that you get key liquidity. Again, you need confidence as you do it. But every Monday, Monday's range is your Monday's high to Monday's low, right? Now, we've got that crazy wick there that wasn't present on other exchanges. So let me go back to last Monday, right? So what we're doing here, and I'm going to do this with a horizontal ray, guys, so you can see this nice and clearly and see how important these levels can be, right? So there's no denying that that's Monday's high, that's Monday's low from the prior week, right? So what's of interest with that for us? Well, a couple of things, especially when, if we take that as a range, like we've been saying, right? We want to play ranges. Now I'm going to cut this range here just into the 50% one, just so you can see the kind of high time frame stuff, or not the high time frame stuff, but the high ticket stuff. So I think, yeah, no, that's my D range. How many ranges have I got on here? Christ, right, there we go. So
you've been learning a lot about ranges lately, innit?
Mate, not just lately. Jesus, I'm always learning, man. I'm always a student.
Bless you, bro. You're a killer, though.
So we've got high, we got our low, right? Now, like Dee's saying, right, when you're coming up, what you want to see is you want to see price give you a convincing breakdown below a key level. For me, I'm interested in the 50% level when we run a key level. So for this, Monday's low is of really great interest to me, right? Why? Because it's clearly a key level. Look what happened when it set this range. Look how key this range has been from us from the high to the low, right? We've been contained in that the whole time. So you can't tell me there's not a point of interest when we rerun it. So you keeping this on a 15-minute, for anyone that wants to know or would be interested at all in my trigger mechanisms, what I'm simply looking for, right, when we interact with these levels, I want to see the sweep of the level, but then it's important to me also to see the sweep within what I'm trading. I'm looking for a sweep of the lows. I'm then looking for the high that sweeps those lows. Yeah. Then when we close above that, this is telling me price is getting ready to move, right? And then within that, what I'm looking for is I'm looking for the same thing, right? So I'm looking for liquidity to get taken out. Then I'm looking for market structure. So we've come into these lows here, here, and here. We've clearly had this impulsive move lower. We set this higher. What do we want to see? We want to see that high broken. I got a little geeky name that I call it, a breaker line, right? You can call it whatever. I'm sure lots of other people have called it tons of other stuff. And then all I'm doing is I'm just looking for my entry on that. Now, I wouldn't normally enter on a 15-minute, but this price is fractal and you can use this method on a 15-minute. You'll reduce your R a little bit by doing it, but it also suits a lot more working people's time frames, right? So we've got our confirmation. We've run the lows. We've come up from the highs. Now what we're saying is if our theory is right, yeah, we can either do one of two things. We can wait for the close back inside the range, or we can take an aggressive entry down here where we're saying, okay, here's the high, the low, break above that high. When we close above that high with this method, again, not suggesting anyone copies this, just one that I've used over the years, is when we close above this high, that's when I activate the limit order on here, right? And then when we retest that, we come into that level and we move away. Either that, or I will enter 50% on that line, and then I'm looking for an inefficiency or a fair value gap, whichever one you call it, for which I then place another 50% of my position, right? Now, the key is my stop loss goes under the origin of the move that breaks the high, which is here, right? And then exactly the same as D, I'm just waiting for price to come up. Let's say we took the lesser of the two entries. We're here. Our stop loss is here. And our first target is the mid-range, right? And someone's going to think we're cherry picking these, D, because that's a 6-hour.
You just made a 6-hour move, fam.
Right, look, I've beaten D by 1.4. I'm out. I'm done.
Fucking legend. With no drawbacks.
But just as a little idea, guys, on how you can do that. Look, we've really pushed the end of our time. D, and look, nothing could end more than this, right? Look, Daink is a master trader. He is a master trader. He is the master of master traders. And you know what, man? I'm so thankful you agreed to come back on short notice, purely because people asked, they wanted to hear more from you.
I apologize, I couldn't come in earlier. I had stuff that I didn't come home till about 3:45 myself.
Man, by the time I stopped talking nonsense, we barely opened a chart, to be honest. So you made it in perfect time, guys. And honestly, the comments, some of the most comments we've had on any stream, guys. So look, there's Dank's Twitter account. Get down on there, find out more about him and what he does. Please do follow him. Please do smash up the likes of the stream. I hope you've all loved it. Dank, thank you so much, my brother. It has just been having me. It's been an unbelievable pleasure to have you on, man. Twice as well, so absolutely blessed. Guys, please do give him a follow. Enjoy the rest of Congress, and I'm going to catch all you legends around the nest. D?
Yep. Take care, brother. See you soon, man.
Take care, everyone.